Canada's real estate market is slowing down in a way we haven't seen in years. Homes are sitting on the market for months or close to a year. Prices are dropping 20% to 50%. And both buyers and investors have vanished. What's really happening? And is this the beginning of a major correction, crashed, bubble burst? Let's start with the number one reason: interest rates. A home that cost $2,800 a month in 2021 now costs over $4,500 at today's rates. Even if prices drop, mortgage payments are still way higher than before. Buyers simply can't afford what they once could. And if they can't afford it, they can't buy, even if someone thinks they can afford a home. The stress test might say otherwise. You must qualify at 2% higher than the actual rate with today's high interest rates. Thousands of would-be buyers fail the stress test entirely. That alone removes a massive chunk of demand. A huge part of the Canadian market used to be investors, sometimes up to 30% in major cities like Toronto and Vancouver. But now they're out because rents don't cover mortgages anymore. Carrying costs have doubled, taxes are higher, and profit margins are gone. Pre-construction investors are walking away from units they can't close. Without investors, demand drops even further. We're also seeing more and more homes hitting the market from owners facing massive mortgage renewals. So now we have higher supply, but fewer buyers. More listings plus weak demand equals slower sales and falling prices. Another big one: people are scared. Scared of buying at the peak, scared of losing their job, scared of prices falling further. Everyone is waiting for interest rates to come down. And in the meantime, they're doing nothing. When confidence disappears, so do buyers. Developers are struggling too. Projects are getting canceled, delayed, or even abandoned. Construction loans are harder to get. Costs are high, and pre-sale activity has collapsed. If buyers don't trust developers, they don't buy pre-construction, which used to be a huge part of demand. Immigration was strong before. Most newcomers are renting, sharing rooms, houses, apartments, with higher number of occupants to reduce rental costs. Higher population doesn't mean more buyers, since students and temporary workers leaving the country. Rental vacancies are going higher, and investors are also selling their rental properties they purchased when there were a lot of foreign students and temporary workers. Let's be honest, the pandemic boom and mass immigration of students and temporary workers inflated prices way beyond what incomes could support. Some areas jumped 30 to 50% in 2 years. Today, buyers simply refuse to pay those inflated numbers. As so many real estate for sale on the markets, sellers still think it's 2021. Buyers know it's not. Once sellers can't hold the carrying costs anymore, they have to sell less tomorrow than today.